Alrighty, everybody. Section number 6 in the cryptocurrency trading for beginners series. 9 steps to becoming a rock star crypto trader. I want to talk you through talking about finding the perfect setup. So let's walk through our slides a little bit real quick. And I know you can see this thing full screen because I have to get the charts just a little bit. So number 1, we talked about the trader's mindset. So you want to make sure at this point you have a strong trader's mindset. You're going to run and operate this like a business without allowing your emotions to take control, right? There's a perfect plan of attack you're going to have that you're going to use. 2, we're going to talk about, you talked about managing your money and these 6 steps, right? And you're following that. You understand support and resistance. You know the trend. You know that we're going to trade with the trend because a trend is our friend. And now we're about to have some fun, folks. We're going to talk about finding the perfect trade setup. Let's go to our charts. So in this situation here, what I would have been looking at is overall, you can see this particular support line was hit over and over again, right? In Bitcoin against USD. Is continually, every time price gets around it, has a very difficult time breaking through. It struggles around it. So a lot of times what will happen is when the market is trending, first of all, we're only going to be taking either, we'll talk about swing trading in a different video, but we can see here that the market started moving up, but this base support line slash potentially future resistance line, if it ever breaks through and stays through, right? That we're going to be, it has a lot of up movement to happen around in this pair. So when price usually gets to around the 61.50 mark with Bitcoin against the dollar, we usually see a lot of bounces. Okay. So the market went up, 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 up. They went down, 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 and it hit the line and rejected. Now, because we were back at that resistance point, I would be looking for a potential buy opportunity to buy Bitcoin against USD around the support lines. What happened? I would have bought here, had a stop loss just a little bit down in here, probably about 100 pips, 150 pips. And then as the market went up, I would have gained almost 400. Yeah, almost 400 pips before I closed out that trade. And now I would have been looking for more opportunities. So let's show what the market did as it started unfolding. Again, the market went up, came back down, hit the key level again, which I would have been taking a buy position again. And we would have went up, closed out that trade in profit. And let's walk through it again. A huge spike. We didn't touch anything with that. Price breaks down again. Okay, so what we're looking for right now, let's talk about right now where the market's at, right, as I'm shooting this video. The market is in a downtrend, okay? So overall, the market was flat, 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 and it's been dropping like a rock for the last 3 weeks, okay? But now we're starting to see the market settle down a little bit. It broke down through that old support, hesitated around that support and resistance, had a real struggle, eventually broke, hit an old support level, went up, retested it again. This is a sign. When it hits a second support level and starts going up, it's a great sign that the market is going to be taking an opportunity. It's going to go up. So I would have taken a buy position here as soon as they saw the market going up and put a stop loss below these wicks here, right? And basically, as the trade starts going up, we'll talk about managing trade once you're in it. We would have started closing out part of our profits, moving your stop loss. A stop loss up, continue to go from there. And then price hit the old resistance level again for a great selling setup. Now we're sitting here looking at the market about to hit the support level again, or sitting real close. So now we can start seeing the market volume is starting to slow down and everybody's starting to chill, which means the selling pressure is starting to wear off. Okay. So what I'm looking at here is seeing Bitcoin come down here, test this line again, looking for buy opportunities for the market to continue going back up. Let's go to the next video. All right, step number 7 in the cryptocurrency trading for beginners series, in 9 steps to becoming a rockstar crypto trader. We're going to talk about using stops. Now, what a stop loss is a protective order to exit a trade if it starts going against you. For example, let's back up here. Let's look for a trade we would have taken here. Yep, this is a support level. Price went up as it came down to retest and start working its way up. I would have taken a trade. So Let me zoom in here and we'll talk about setting up a stop loss. What I would have done in this situation is taken a trade here, and I would have put what's called a stop loss. In fact, let's open up an order box. Let's say we wanted to buy Bitcoin at 62.36. You place a limit order, and then we set a stop loss around 60, 60. Okay? 60. Okay? Of course, the numbers aren't going to work because the market's currently below that, right? But here's what would have happened in that situation. Let's say that we bought here, but then instead of it going up like it did, very predictable, it broke down and just exploded downwards. Do we want to let this thing go forever? So we have to sit in that trade maybe a year before it goes back up, before we can close out and get our money back? That's not what we want to do. So we want to do what's called set a stop loss. And a stop loss is a secondary order that says if the price goes down to here, just dump the trade. And again, we talked about no more than 2% of your account balance, right? 1 to 2% of your account balance per trade. So again, let's say you have a $10,000 account. If that trade goes against you, what do you want that trade to do? You want it to close at a loss, but it's a small predictable loss. 2% is not a big deal. 1%, whatever it is that you want to manage, whatever you're comfortable with. Okay, so that's what a stop loss is. We want to make sure we protect our trades, and we'll get into here in another video. Once you're in a trade and it starts moving up in profit, what do you do from there?